Kris Krohn here. I'm in Poland, and check out this house right behind me. Wherever you live in the world, whether it's in the United States, Poland, or anywhere else, if you buy a house with a bank, you've got a mortgage. And from time to time, with that being your biggest expense, more than likely, you got to be thinking, how do I lower my mortgage payment? Today, I'm going to show you.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah, it's one shot, now the future is yours. Go!
Man, I remember the very first house that I bought. It was this tiny little bungalow. I bought it for $110,000. And based on interest rates at the time, my mortgage with, principal, interest, taxes, insurance was just over $800 a month. And I remember thinking to myself, man, that is a monstrous expense for a poor college kid at the time. Now I want you to think about last year, home prices in America increased over 20%, which means that the average purchase price now is closer to $344,000. That means that the average person buying a home today has a 20% higher payment than they've ever had in the past. And 20% on your biggest expense, well, frankly, you have to be honest, that's a really big deal. That's enough to sink certain people, hurt certain people, which is why today I want to share with you all the different tips on what you can do to lower your mortgage payment. One of the things that you really have to ask yourself is, what would you prefer? A house that is increasing in value or biting off a bigger mortgage payment? I think a lot of times we get a little short-sighted and we think, well, Kris, if I could lower my expenses, that's got to be really important. But there's an inverse to that, because if your house is going up in value, you're increasing equity. And remember that most people at the end of their working lives will look back and say that the greatest asset that they have is not what they put in a 401k or an IRA, it's the value in their house. Over 30 years, you could literally, if you stayed in the same house for 30 years, you could pay off the mortgage, or you might have moved a few different times. But if last year the market went up 20%, well, 20% on $344,000, that's a lot of money. Let's say it's $70,000. What can you do with an extra $70,000? Well, if the payment was too much, you could sell it, take that $70,000, you could invest the difference. And at the end of this video, I'm going to show you ways of tapping into that equity so that you can put it to work. This is, after all, an investment channel, teaching you real estate, teaching you business, and ways of being smarter than the average person, because that equity increase in your home, imagine if you had a $70,000 increase on 10 homes. Well, that would be $700,000 in a single year. Imagine the guy that buys homes just about every single day. Real estate is an amazing way to build wealth. You might as well start doing it on purpose instead of on accident. In a moment, I'm going to give you one of many top tips of what you can do to immediately lower that mortgage payment. And one of the reasons why I felt called to make this video today is because I'm really concerned with what's happening in the world. I'm outside my hotel. Today we're getting ready to go into Ukraine. We're bringing $1 million worth of medical supplies. We've been fundraising. My foundation has kicked in $250,000. And when I built all this wealth in real estate and in business, the whole goal of that was to be able to have this money that could be used to do some great good. Don't get me wrong. It all started with a self-interest of I want financial freedom for me and for my family, and I want to be able to take us on trips. I want to be able to live the lifestyle and give my children all the things that I want. But the goal was always to make more than just what I need, because if all you're doing is producing income and wealth for yourself, or even trying to cut your expenses for your own benefit, it kind of puts us a little bit into a selfish spot of life. But when your financial goals are greater than what your personal needs are, that's when you can step from selfish into a selfless life. So today's video is really designed to put you in a better financial spot so that hopefully down the road there's greater good that you can do. So let's talk about it for a second here. One of the tips on how to lower your mortgage interest has to do with what I was talking about with homes appreciating in value. You see, until you have 20% of your house paid off, you have something called mortgage insurance. It's a requirement. It's basically the bank saying, hey, it's kind of risky for us to be lending you money until you have enough equity in that home that we feel comfortable. So we're going to charge some insurance, and in the event that you default or something happens, we can cash in on a bit of a policy so we as the bank don't get hurt so much. Well, that mortgage insurance might be costing you $100, $200, $300, $400 a month. It's considerable. And yet, if your home has gone up 20% in value, guess what you can do? You can actually go to that mortgage insurance provider and say, hey, reevaluate my home. It's gone up in value. Guess what? I now have that 20% equity position. I now want you to drop my mortgage insurance. You might have to do a refinance to make that happen, but that alone could save you quite a bit of money. The bigger tip that I want to share with you today, though, has to do with getting a home equity line of credit and putting that money to work like I was just talking about. So a HELOC, a home equity line of credit, is you going to a credit union. It doesn't even have to be the same bank where you have the loan, and just say, hey, guess what? I owe a lot less. My home has gone up in value. I'd like to get a home equity line. Now, it doesn't cost any money to get a home equity line of credit. In most cases, it's entirely free because the bank would actually say, we'd like to give you access to some money. Banks have a problem right now. They've got record high deposits. They have money that they need to put in the hands of people, and guess what they love to collateralize it with? They love to collateralize it with real estate. In fact, it's the way that banks are set up and operated. While we might experience a recession, a stock market drop, you're not going to experience the real estate market falling in on itself. It actually doesn't have a bubble to pop until we've been able to replace all the missing real estate first. So right now, am I aggressively buying as much real estate as I can? I 100% am. And if you really wonder if whether you should or not, check this out. I'm a really big believer that everyone that isn't doing as financially well as they want to needs to get an outsider's perspective. More importantly, they need to get a financial game plan. They need someone on the outside looking in saying, well, based on your exact financial situation, based on the home that you do have, based on the fact that you're renting and want to own a home, based on where you're financially at in your career, what's happened lately, here's what you need to do to make up the difference to get where you want to be. I call it a wealth plan. And if you'd like to get a personal wealth plan on how to financially increase your situation or explore some of the possibilities that we've discussed in today's video, then click the link below and a member of my team can get in touch with you and share with you a free customized game plan. Now, one of the reasons why I do this is because I really like connecting with you, especially if you're a subscriber and you've been watching my videos on any of my platforms, because I want you financially educated. The most dangerous financial information to you is what you don't know. So that phone call can make all the difference of helping you get a perspective that you don't have. And that perspective might be what's required to get where you want. That's exactly what it was for me. That's how I became financially free in the first place, is because I had a mentor that said, don't do it this way, consider these possibilities. I went down that track, they walked me through it, they gave me the help that I needed, and then a short time later, I became financially free. That might be actually what happens to you if you click that link below right now and talk to a member of my team. Well, hey, thank you for watching today's video, and I got some work to do out in Ukraine, and if you've made a donation to help me on this relief effort, I certainly want to thank you for that. There's still an opportunity to do that in the link below. But more importantly, if you're thinking, okay, Kris, like, how do I learn more about building this wealth like you talked about? Recently, I took my CEO, picked him up in a limo, and I showed him my first several homes that I bought that made all the difference in the world. If you want to see how that journey went, the first real estate I bought, and how all that wealth came about, click right here.